baby, my spring chicken heart is coming back to life as the markets have been rallying today based off the Federal Reserve meeting that just happened in the last 2 hours of this trading market. And take a look at what this has done. The S&P 500 is now up 3.34% in a single day. Needless to say, the volatility index is still all over the place, but take a look at year to date because we are not back to all-time highs. Honestly, I would encore the market to kind of stay down in this range and just hold this flat so we can continue accumulating, because God knows, as fun as it would be to see the markets go back immediately to all-time highs, we know that is just not sustainable here, folks. But this has been a bit of a sigh of relief to all of us in our portfolios because, I mean, take a look at this. The NASDAQ, or the QQQ ETF representing the NASDAQ, is up 4%. The Dow Jones, guys, is up what? Another 2.94% today alone. This is some wonderful, wonderful stuff. Honestly, from an accumulation standpoint, I'd rather the markets remain flat, because for us to go back to all-time highs might be a little unsustainable based off the last earnings cycle we just saw. But those earnings were great. We saw great pricing power, even from the companies like Starbucks, Procter & Gamble, Pepsi, Apple. All of that really bakes into a very strong economy, guys. And we all know the money printer that is Jerome Powell, that took us to the moon and back, is now trying to protect the markets from going into a complete calamity here. And we're seeing all these now headlines as the market cheers after Powell downplays even larger rate hikes. So we all knew that the 0.5% rate hike was coming. It looks like they're going to be doing that month over month into the midst of summer. I wouldn't be surprised if they do that to about a 1.5 to 2% interest rate hike, and then they'll probably start tampering and cooling that off depending on what inflation looks like moving forward. Now, don't get me wrong, we're not out of the woods yet here, folks. Even as good as the jobs market is, as the pricing power behind companies, and the fact that, inflation is kind of trying to figure out whether it's still coming or going, I would be a little bit more concerned from the inflation side. Now, I honestly thought we've seen the peak of inflation, going back to those April, March numbers where we were seeing an 8% inflation rate, guys. All you have to do is look at the commodities market. We can kind of go into our crystal ball, look into the future by just seeing what commodities are doing even before the Fed meeting comes up, because this is stuff that all affects our life. We know rental, what it costs to rent for living. We know we're talking about energy and fuel, because if fuel's going up in value, that means everything's going up in value, because obviously all those goods have to be shipped. And then on top of that, guys, food, wheat, housing supplies, all that stuff. So let's get into this by first and foremost talking about the energy side of things, because I'm always looking at oil, because this will dictate where inflation goes moving forward. Now, the oil barrel price has found a sustained range recently that has just been kind of, playing in this little range bound, but gasoline for some reason has been trucking, no pun intended, much higher here, folks. We're just peaked all-time highs for gasoline prices. So that does not bode well already for inflation. And I, by no means, am an oil expert. I don't know why the cost of gasoline has been going up, whereas oil has been sustainably flatlining. That's something that I'll have to look deeper into. And maybe if you know why, let me know in the comment section below. But coal is largely used for power generation still, with many of the utilities that I hold, like Southern Company here, guys. And this has been kind of not hitting its all-time highs, but it's still stuck in this range bound of going a little bit higher. Now, I figure because the geopolitical events have come to a relative cool down period here, where it almost looks like the geopolitical events could come to an end very shortly. Cross our fingers, because that's just ridiculous. And that's what largely impacted, the oil prices. And I thought that's where we've seen this big rally from. But after this big push, you figure that would be roughly the end of the insane oil energy rebalance, right? And I mean, even during this period, guys, some of the stuff that worries me as well is things like natural gas. Natural gas, I can't figure out why the demand is so high. Maybe because it's less carbon emitting. People are adopting it into engines with things like Hyliion, and a lot of people are using it to power their homes with natural gas generators. And yet this thing is still trucking and finding new highs. So this is a little bit concerning, which still makes me think that we'll see more demand for uranium, even though uranium is pulling back. When it comes to energy generation, guys, we all know at this point that nuclear power has a less carbon footprint than wind and pretty much solar combined. The footprint of the buildings are much smaller for the output of the electrical capacity it produces. So uranium, I'm still bullish on, even though it's kind of pulling back here, but this will all bake into what you're paying at home for utility prices, right? And more interestingly as well, when I'm looking at the precious metal market here, I think it's kind of funny because everybody during that market crash was debating on whether Bitcoin was like this inflationary hedge, and all the gold bugs like Peter Schiff were saying, you need to buy gold, silver. These are the things that are going to protect you through this market. But meanwhile, they've actually traded exactly with the market here, and so is Bitcoin. So basically today, Bitcoin was up higher, and now we're seeing gold and silver jump up off the same Fed meeting. So gold and silver no longer trade as separate assets against the market, in my humble opinion here. So let's look at some of the other metals. Copper here has been pulling back, lumber's been pulling back, steel's been pulling back, iron has been pulling back pretty aggressively and finding this new range bound here. Wheat, a very important one for the global food economy, has been pulling back and finding a new range bound. So at least from a few aspects, it doesn't look like things are getting too as out of control as we've seen over the first quarter of this year. And that's probably why Jerome Powell has been getting so giddy, because they're like, hey, the markets are really not that bad. It looks like inflation may become more controllable in the future, to the point where we may even see negative inflation here, folks. What is negative inflation? Well, to put it in perspective, anything you're going to buy. I can use my desk here as an example, or those mics or those video cameras. In the middle of the pandemic, everyone was trying to buy webcams and the demand went through the roof. Well, what ends up happening is, because all those people are competing, and same with my parents that are trying to get a pool at their retirement house, all of these construction guys were charging like an absurdly large amount of money because they can get away with it in this market. But obviously, as the demand starts to cool off and the supply starts to match the demand, all of a sudden you'll get competitive pricing, where some guy might be able to offer a lot less than the current market price, and then that means the guy offering the highest amount has to lower his price to keep up his business, right? So that's what's going to end up happening. I think by the end of this year, we could potentially start seeing negative inflation rates as people can compete on those margins, right? But this has been a great earnings season, man. I mean, it's nice to see Starbucks. Congrats to you Starbucks fans out there, trading up 10% today. This is well deserved after the wicked sell-off. I honestly think Starbucks is an incredible buying opportunity. I am not personally buying it. These are just some of my opinions here. It's also nice to see Scott's Miracle grow up 10%. These two stocks to me have been sold off the most ridiculously. And in the tech world, guys, things like Facebook bounding 5.37% today, back to $223 a share. So, I mean, this is a real good sigh of relief from just those general stocks that have just been getting hit so hard, even though the numbers they're posting are still well within reason to their valuations. Now, the next thing I'm most paying attention to, guys, earnings. We are not out of the earnings cycle just yet. We're going to be getting Canadian earnings, a lot of things like the telecoms, the banks, and of course our premier tech giant compared to the US, which is Shopify. Now we're going to get earnings, I guess, tomorrow in the morning. And this is something I'm really excited for, because Shopify is so comparable to the e-commerce space with Amazon, Facebook, Google, when we're talking about e-commerce marketing. And Shopify's been really looking to expand their facets, obviously trying to get into Amazon's business, where they're going to start building out their own warehousing. So because of that impairment charge of that investment, I'm curious how much that's going to affect their current earnings period here, considering their Google Trends traffic has been a lot higher during this time period than things like Google's ads, Facebook ads. So I'm curious to see how that all bakes in. And now that's a lot to go through, so we're going to save it for tomorrow on the earnings period. But I want to pass the question off to you at this point. How did you guys feel about the Jerome Powell Federal Reserve meeting? Do you think inflation is going to continue to go higher? Do you think we'll see negative inflation? Obviously, all of this is pure speculation. And primarily, I think most people should just be cost averaging into the indexes during this volatile time, because it's really hard to know what's doing better, what's doing worse, where the value is, because the market is so volatile and unpredictable here. I feel like it's a place of solitude. But let me know what you guys think about all of that, and stay cool, stay awesome. And as always, I look forward to catching you in the next one.